The best business entities for a real estate investor. That's the topic for today's episode. And without further ado, let's dive in. Hello everybody and welcome back. And in today's episode, we're going to cover everything there is about business entities. Which one will work best for your business model, whether you're a real estate renter holder, a house flipper, a wholesaler, etc. What are the best strategies that you can actually leverage for your business that is going to help you keep the money tax-wise in your pocket so you can continue to invest further. So we're going to talk about LLCs, sole proprietorships, and even corporations. And Jennifer is with us today again, so welcome back.
Thank you for having me.
So I'm going to open up the floor again and let Jennifer share her knowledge regarding all of those different legal entities. So we're going to start out with what people knows and hears about the most, which are the LLCs. So LLCs, they stand for Limited Liability Company, and I'll let you take it away.
So limited liability are the most popular because it's the most newest in the industry of the types of entities. And in my opinion, I believe it's one of my favorites. But every structure depends on the individual. So definitely consult with your attorney or CPA. But LLCs, the beauty about LLCs is that you are not personally liable. So let's say it's just you starting out a business and you want to do a real estate investing business. You don't want to be sued personally. So the beauty of an LLC, a limited liability company, is that you can put that property inside of the LLC. What the IRS calls an LLC is it's a disregarded entity. So it's an entity separate from yourself. But the beauty about it is that it's a flow through. And what flow through means is that it's only taxed once.
So you're saying that if you have an LLC, you will pay taxes only on the LLC, and then whatever's left out of it, let's say income minus all of the expenses, it's going to flow through, as the term says, through your personal income. But then once it's in your personal income, you won't have to pay taxes for it. Is that correct?
Yes. So what I'm saying is that you just pay it. So it flows through the LLC, and that it just flows through to you, that you're only paying the taxes on your personal income. If it's you by yourself, you can just file something called a Schedule C with your tax return, and you'll just file it with your one tax return. Or if you're in a group of partners, you may have to file a different return and get something called a K1. Hope I'm not getting too technical, but it's still, that entity is still not taxed. It's still flowed through on your personal tax return. It's not taxed twice. So that's what I mean by flow through.
In terms of the liability, right? What would you say are the benefits of getting an LLC? Because I've had this question asked many times. Well, can I just get insurance for the house? Can they? And should they get both? Like, what's your take on that?
My take on it is that, yes, you can get insurance on the house, but let's say you start to own more than one house. Let's say you have one house that's worth $100,000 and you have another house that's worth $200,000. Now you have two homes that's in your name, and let's say someone gets injured on one house. Now they have access to sue you because you have both houses. So LLCs kind of is pretty much is asset protection. And what it does is it boxes the person off where it's just this house is that LLC. So clearly the more LLCs you have, I'm sure there's a lot of paperwork, but the more asset protection you have, because let's say you have more than one property. You don't want anyone who was injured on one property, and yes, you have insurance, but now they know, oh, she owns two, so I'm injured more than the insurance policy,
so
and they want access to that.
The other house.
So you want to protect that. So the beauty of LLCs is that you're not taxed twice. You're disregarded. You're not taxed several times because you have LLC, 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 but you have a sort of flow through where you're the same owner, but you're just truly being smart about protecting your assets.
A way to recap is, yes, you can only have insurance, but then it won't protect your other assets. So for example, if somebody falls in front of your house and you have, let's say, 10 rentals, that person who falls in front of that one house can go after all the remaining 10 houses that you have in your portfolio, right? But if you have an LLC for each and one of the properties, then they can only sue you for that one house that they fell in. It's still painful. You still have to go to court and fight them, but you are protecting all the other 10 houses that are within your portfolio. They can't touch that because the incident only happened in that one house in particular. Is that what we're getting out of it?
Yes.
And how about the expenses that you actually incur to create those LLCs? Are they tax deductible as well?
Yes, they are. So why would you not do it? Why would you not do an LLC to protect yourself? If you're seriously about thinking heavily of real estate investing and owning many properties, why wouldn't you divide your assets up and protect yourself like that? And it's a write-off, 100% write-off.
There you go. Another question that I've had, do you recommend having one LLC and putting all of those houses in one, or do you recommend dividing them? Is there some kind of like cap in terms of like monetary worth of that one house?
That answer is a great answer. It depends. So obviously definitely the best answer is get an LLC for each house that you have. But sometimes that could be a lot of paperwork, and if you have a mortgage on your property, you have to factor into your mortgage on your property. I guess if your property is owned free and clear, you may want to do that, start doing that. But if you have a mortgage on your property and insurance, you owe debt on the house. So when people sue, it's not like their cap is as big as if you had owned the house free and clear and now you have a bunch of LLC. So I guess the best practice recommendation is to have an LLC for each property, but many people, I guess that's really up to them of how much they want to control, and hope, you still have to have insurance on your home, on your rentals insurance at that, on your rentals. But you may find that maybe I'll just have these few, and then as I pay the mortgage off this one, then I can separate each one. So it really is a point of choice, but I would say the most conservative way to do it is to have an LLC for each property.
If you can afford that, of course. If not, at least have one and
Yes.
try to put some of your rentals in there. And then as you start gaining some equity or paying off some of the mortgages, then you can start slowly transition and moving them out into the multiple LLCs, just so you can actually stay protected. Now, this question might be a bit of a tangent, but what happens, because we know that when you're doing a business loan, then the lenders, the banks, actually, they prefer that you close the house on an LLC name. But what happens when you have a regular mortgage, a house that you lived in, but then eventually you decide to move out and you want to put it up for rent, right? So how does that factor into the LLC? Do you do the lease and the name of the LLC, but still keep the mortgage under your name? How does that work out?
So that's a tricky question, and you should let your mortgage company. So some people don't. They think that if you're paying the mortgage on time, the mortgage company never finds out. But somewhere when you close on that house, out of those thousands of documents that you looked at, the mortgage company wants to secure the asset. So God forbid you are behind in a mortgage payment, they don't want to have you have someone else on the deed and all that stuff. So there is somewhere in that documentation some null and void that you are the responsible guarantor. So technically best practice is to have the mortgage paid off so you own the property free and clear. But if you can't, I have read of the slight chance that they may find out, that you should let your blank know that, hey, I am still the guarantor. I'm just putting this on. I'm still the owner of the company, and maybe they can do a deal where both of you guys are on there so you can start using the LLC, because typically mortgage companies want to make sure that you're not getting the home and then trying to get yourself out of debt and hiding it in LLCs, because I guarantee you that somewhere in those closing documents you signed that you are liable for this asset that you
True.
purchased.
So, as I mentioned in prior episodes, real estate is a relationship business, so you definitely do not want to burn that relationship with the bank. Not just because of that one house. Maybe you'll find another deal in the future and you want to go back to the same bank and have them give you the funds so you can continue expanding. So always be transparent. And thank you, Jennifer, for clarifying that question. I have gotten that question a lot. What happens if? What happens if that? So I hope this helps clarify some of the doubts and stuff like that. So now moving on to the different types, right? So partnerships. I've had people ask me, well, can I have an LLC, but then have another person in it? So that way either my husband and I, or my wife and I, or my brother and I, etc., we co-own that LLC. And it's kind of interesting because even though it is still an LLC, that becomes a partnership, right? So I'll let Jennifer explain that a little bit further.
Yeah, so you kind of want to do that. And like I said, even though an LLC is a disregarded entity, you can be a single member of the LLC, but you can have a partnership. Lucy and I can come together and say, hey, we want to buy real estate. But then if we don't put in our bylaws and describe what is it that we're doing, we have the potential for someone suing both of us. So let's say Lucy's rich and I'm broke and we want to do a partnership, and then we decided to do 50-50, and I had some cash saved, but I don't have as much wealth as Lucy, and we decided not to put in an LLC. Now, Lucy's, they don't matter if we were split 50-50, they can go after whoever has the money that they want to sue
both of our
after.
names is in there.
Both our names is in there, and they have control. So an LLC or a limited liability company would help you in a way to say, hey, what our capital contribution is, what we have, and we can also be limited partners in there depending on if I want to contribute more or less, or maybe I don't have as much to contribute. So really the LLC protects both of us in a way that they can't even sue each of us individually, but they can only sue the LLC.
Before we move any further, I heard the term bylaw. So for those who don't know, what exactly is a bylaw?
It's like the rules of your company.
Okay.
It's like your articles of organization, like how you would state you're organized in, and then you have rules of how you are running your company. Who are the members? And the LLC is not shareholders, it's called members. Who are the members of your company? So if I'm joining, I may not be a 50-50. I may be a 10-15%.
Right.
member.
So you can actually determine that. So let's say we do decide to join a partnership and Jennifer only can afford to put 20% and I put the remaining 80. So she becomes a 20% owner of that limited liability company or that partnership, and I become 80% owner. And you can also dictate how much access she will have or your partner will have to the gains out of it. So let's say you collect rent, so because she put 20%, then she's only entitled to receive 20% of it. Or you can just simply say, you know what, we want to do this 50-50, right? Because maybe she put in 20% of the capital, but she's doing all of the legwork. Meanwhile, I'm just like sitting back and relax while she's doing all the work. So the agreement that was decided was maybe a 50-50. So you can actually negotiate how that company should be run and how the gain should be run. And it's all going to be listed in those bylaws, which are held privately by you. And so you get to dictate how you want to run it.
And it's good to put it in writing. I mean, I know we're friends, but it's when it comes to transactions like this,
And money.
you want to money and friendship. You want to be clear on when you join a partnership with someone, what someone's contributing. Maybe they're contributing wisdom, knowledge. You want to be clear and explicit of what they're doing. And even though your friends are like, don't worry about it, get it in writing if you can, and go seek out an attorney that can help you further that in your local area, that can help, that has experience in that field of forming LLCs, that can help you write up your contracts and your bylaws.
So now that we've talked about the concept of an LLC, what a partnerships is, for those who don't know, what do they need to get started with an LLC? Do they go to a courthouse? Do they reach out to an accountant? Do they go to an attorney? Like, how exactly does the whole LLC formation process will work?
So now people are doing it on LegalZoom. I highly suggest working with an attorney because there may be some rules in your state that you may not know about. I suggest doing your LLC possibly in your state, because one of the things that most states require is that you have nexus in the state. If you have a property, employee, or a bank account in your state, they want you to do it in their state, and maybe it can preserve you with a lot of paperwork. So it's just learning the rules of the state that you planning to invest in and where to set up that LLC. You can go to your local county clerk in your area, or you can hire an attorney or do LegalZoom if you feel like you have a handle and kind of know. But I definitely recommend seeking an attorney to ensure that in your state you're not missing out a law or any new rules that you should be aware of, and possibly also seeking out a real estate attorney that knows the laws of that state.
Okay, so in order for you to open an LLC, you have to be familiar with the local rules in that state. And given your response, it sounds like basically you can open an LLC in anywhere. So if I live in New York, I can easily open up an LLC, let's say in California, as long as I know the local rules and I abide by those rules. And I also have someone who specializes in the rules and the law in that area. Is that correct?
Correct. And then sometimes if you're not in that state and you don't have a physical presence, you may need someone called a registered agent that does it on your behalf for you. So just look at the rules of your state and this other state that you're looking into, and possibly seeking an attorney of that state just to make sure you're not missing any factors. We live in a big country where each state has their own tax law, and not even just tax. I'm happen to be in tax law, but just have their own state's jurisdiction. So you really want to familiarize yourself. I would suggest not just going online and say, I'm going to do it here or this because of that, and just saving yourself a lot of time and paperwork that some things you probably didn't even need to do. So,
and for those who don't know, to elaborate a little bit more on the registered agent, before you even consider open up an LLC in another state, besides from learning the rules, of course, you also need a physical address in that state. So they are what they call the registered agent, that you actually pay for a fee to utilize their address in a legal way to host your LLC entity. For example, I live in New York, but I own rentals in Alabama. I will need a physical address in Alabama so I can open up my LLC over there and then have all of my rentals placed inside of that LLC. So in the event of a problem or something that I need to take care of, then I have a physical address there, and the rules of Alabama will apply to whatever happened in that jurisdiction. Is that correct?
correct. You said it perfectly.
So now that we learned about what is it that you need to get an LLC started, then what's the process going forward? Like, do you need to maintain it? Is it a one-time fee? Like, how does it work? Like, going forward towards the future.
So if you do start to venture out in states, and every state is different, but that's why I say speak to your local CPA or attorney. But you do need to learn their rules, and if you decide to not be a part of the state and go to a different state, you are going to have to keep up annual tax reports for them in that state. So it is really crucial to be familiarized with that state to maintain that LLC, because of course every state wants your business and they also want your money and they charge for you having a physical presence in their state, and they want to know. So it is important to make sure you understand the tax rules of that state and what annual tax reports or any, registered agent fees or, any rules of that state that you would need to maintain that LLC in good standing.
And all of those fees are actually tax deductible. Correct?
Yes, they are 100% tax deductible.
As long as you're doing business with them, they are all tax deductible.
Yes.
Wow, so that's very informative. Thank you for sharing.
You're welcome.
Now that we've learned about LLCs, let's just move on to the other type of legal entities that people can actually leverage when they're having their business, whether it's in real estate or any other field. So LLCs are obviously our favorite because of the pass-through and their simplicity. And so what about other entities like, I don't know, an S-Corp?
Yeah, so S-Corp is also a flow-through, which you have to file 2 tax returns, but it's still a flow-through, taxed once. S-Corp came before actually LLC, and S-Corp does limit you a little bit. One of the rules of an S-Corp is that you only could have 100 members, and they all have to be of U.S. residents. With LLC, it's flexible. You could have foreign investors in that LLC, so it's a bit more flexibility in LLC, but S-Corps are still good if a lot of people do S-Corps, and there could be another topic to deduct their Social Security and FICA taxes and take salary deductions. We won't get into that, but you could still use an S-Corp. Just know that you're going to have more paperwork and you may have more restrictions. So if you have someone who is international that wants to invest in your, in there, they probably can't do it because they're not a U.S. citizen or U.S. resident. But S-Corps was before LLC. LLC was the newer, more flexible, more, let's say, more liberal model that kind of just opened up for everyone to just be able to participate in. But some people still use the traditional S-Corp. Just keep in mind that you may have to file more tax filings, but the most importantly, you're not taxed twice. You're only taxed once.
So why will people actually choose to have an S-Corp as opposed to an LLC?
One of the reasons is maybe if they are maybe this is their sole business is real estate investing, and then they want to take a salary deduction for themselves and get themselves a W-2, they can do that.
Which is something that the LLC wouldn't let you do?
If you were a single member. Essentially, you can't form a partnership return with yourself. But you can allow to do that with the S-Corp. Just be careful because they are regulated very heavily by the IRS and making sure you do the fair market value of your W-2. So I do heavily advise talking to your local CPA or EA itself.
Yeah.
But the beauty of it is a flow through. But I still think the best entity for me would be LLC. True. Because you don't have to file all that paperwork if it's not necessary. But if it is something that you find yourself as a big real estate investor making a lot of money and you want to have a W-2, because banks seem to like W-2s nowadays.
Pay yourself.
Mm-hmm. It is an option if it's just you and you don't have, because an LLC also can be taxed as an S-Corp, even though it's still a flow through, meaning that you can do all of those filings, an S-Corp return plus your personal. But the LLC I love about it because it is still my favorite because it is much simpler.
In terms of fees, right? Are S-Corps more expensive, about the same than LLCs?
I guess it depends on your state. Most people think LLCs is more expensive. Most states are. I can speak for New York State, LLCs is way more expensive than S-Corp. A lot of people do S corp just because it's cheaper. In New York, you have to publish in the state newspapers, so it's a lot of work. So a lot of people go in New York, they want to stay in I'm just speaking for New York, they think the S corp is better, but the LLCs, even if it does cost more, it is a lot more flexible and less paperwork. So I guess when you talk to your attorney or your CPA, you should gotta, maybe you talk to an attorney and a CPA is the best practice I would suggest. See what works better for you and what state you're in, because the fees are totally different in every state. And, I just don't want to speak to all of the states. It's very important to speak to your local CPA and your attorney to find out what works best for you. But a lot of people in New York, I know, default to that because it is much cheaper, and LLCs tend to be more expensive, I've been told.
So in terms of liability, because you hear LLC, you think limited liability, and then corporation, there's no such words as a liability. Like, how does it work? How does it differ?
Same asset protection. It's the same. So whether you're an S corp, it's still a corporation, meaning that it's a separate company from yourself. So the beauty back again to LLC is that you get the same benefits without having to follow all that paperwork. It may, depending on your state, cost you a little bit more, or some people, depending on state, may be cheaper, but it'll just be very easy to formate, and you don't have these rules of I can only have 100 members and they all have to be U.S. citizens, U.S. residents. You don't have to deal with that, but you still, back to your question, have the same asset protection, meaning that whatever property is in that corporation, is just how you are reporting it is the key.
Okay, so we can conclude in a way that people will tend to choose an LLC or an S corp based on one cost, right? The formation cost, and then the type of asset protection that you're looking for.
The asset protection to me is the same. If someone sues you, they're gonna not sue you in your name. That's the key. So if you're in an S corp, they're gonna sue the corporation that you're in. And the limited liability company, even though it's a disregarded entity, it is also a corporation as well.
So it sounds like it all comes down to price, flexibility, and paperwork.
Yes.
Okay.
That is perfect. That is the perfect way to answer it. The beauty thing is no one is suing Jennifer. No one is suing Lucy. They're suing whatever your name of your S corp is or whatever your name of your LLC is. So that is the beauty of both of them.
Okay. And then what about the next step up? I think a C corp. Right?
That's taxed twice. You're taxed on the corporate level of you're taxed on the corporation return, and then you're taxed on your dividend income on your personal return. So you're taxed twice on the C corp. You're probably thinking, why would anyone want to do that? Well, some people, if your company, I'm just going to speak in general, wants to go public, and you want to have, people invest in your company, and you want
like the Facebooks of the world,
the
Amazons of the world, right?
Exactly, and you want people to get shares, and you want capital funding, but also realize with capital funding comes control. So you're actually giving people control of your company if you're not putting the money up yourself. So some people will think, okay, I don't have any money right now to invest, but I believe this idea is really going to work, and I'm going to give you stock to invest for me. So that is not my forte, but it works for people. So they may want to do it that way, and they'll still have the asset protection that no one could sue them individually for coming up with this company idea. It'll just be, they'll be sued in the company's name. But the reason why some people may choose the C Corp route is because of capital funding. They want to be able to give shares to people for investing in their idea. Like Lucy said, the Facebooks of the world that wants to go public, do an IPO, go on the exchange, they probably would have to be a corporation, and people would need to see their books, and that also requires more paperwork. But my favorite is still LLCs. I don't want to be taxed twice. I only want to be taxed once, and I don't want anyone controlling my business. So
for those who don't know what an IPO is, that it stands for an initial public offering, and it's basically when a company is about to go public for the first time. So you get exposed to like the first number of shares that you can buy, and it's typically at a discount. I'm not sure. Yes. I could be wrong, but I think that's basically what the main essence is for when you buy shares during an IPO. So back to the C Corp conversation. It sounds like C Corps are usually for much larger companies. Would you say over 100 members or something like that, or?
It depends. Some people like the name Inc. behind their name, but I've had people come say, "I just want to see INC," and they're just starting, and they really don't know what the implications that come behind INC. That you have to have file, it's taxed twice. You have to file multiple paperwork. Actually, have to get stock members. They really don't know all that's involved with it. I mean, it's their choice, but I typically think it's for the more bigger companies. In my opinion, I would agree with you on that. But some people who have started out just went straight to wanting to be a corporation, and they really have this idea and think they're gonna venture out and get capital from other people, and people are gonna believe in their ideas. I just think they just need to keep in mind that you hear about companies being bought and buying up their shares and taking over. I am very controlling. So I know my person, and I don't like to pay more taxes than I need to. So
Right.
I think it depends on your personality, what your goals are, but you can't be so controlling if you're not putting the money up front, right? And
Right.
these people, so maybe you're the visionary and you're like, I just need the money and them to just believe in this idea and it's going to work. So it depends on you, but normally the bigger companies tend to go the C Corp route, but I think LLC is my favorite entity.
So the N connotation, is that applicable only to C corps or all kinds of corporation, including the S corps?
What do you,
Inc, the INC.
Oh yeah, so S corp has Inc behind it as well, but it's just how it's taxed. So it's not table tax. It's taxed as a flow through, and like I said, some people want to take salary deductions. And my thing is, I also tell people, think about if your company has losses, can you really afford to? Is it really worth? How are you gonna be able to take salary deduction? And is all that paperwork worth it? Is it worth it to if depending on your state, if the LLC costs more in your state, is it worth it to just be an LLC and be able to be taxed correctly and not have to, you're saving on the back end that you're not having to file all those multiple tax returns. You could possibly file your LLC with your personal tax return if it's just you. So these are things that you should just really sit down with your CPA and attorney and learn the bylaws. But the beauty thing about all of them is that nobody can sue you.
Yay! So one thing, and this is more for like my personal information. I know this answer now, but I'm thinking that if I had that question back in the day, chances are other people are having it. So I've always seen Delaware, Wyoming, Nevada, like behind the state formation for whatever entities that you choose from, whether it's a corporation or a limited liability company. What makes certain companies want to pursue, let's say, a corporation or a company in Delaware and not Wyoming or New York? Like, are there any benefits to a certain extent as to why they will choose to open their companies?
Easier and cost and cheaper. And like I said, we could speak to New York. New York is, most people do their LLCs outside of New York because they think it's faster and easier, but they also have to think about, if you're doing investment property, what are the laws of your state? If something happens to your property, how easy is it for an attorney to be able to represent you in case you have to go to a court or anything of that matter? So I really stress, is it necessary? Because one of the rules of many states is that you need to form as doing business in our state if you have nexus, and nexus is you having property, bank account, or employee in the state you're at. So if you're trying to do a business in another state and you live in New York, then that would be wrong. That would be taxably wrong. You actually have to file that LLC with New York where you're physically located. So, and when you do file another state, and let's say if you have to do it, you'll become a foreign entity. It's like you're born in Delaware and then you're trying to do it in New York, but you was from New York all the time. Was all that necessary? So that's where speaking to an attorney and speaking to a CPA combined really becomes crucial, and really understanding, depending on the type of business, maybe if you have an online business, you have a little bit more flexibility, but with something like real estate, I really would learn the laws of that jurisdiction, state jurisdictions you have, because each one is different.
And last but not least, we also have another entity that I've gotten a lot of questions about, and that's the sole proprietorship. So we can actually go over the benefits, the do's and don'ts. What do you have to share with us about?
It's easy. You could be today and say, hey, I want to start my business and get this house. I'm a sole proprietorship. But the hardship is, and the reason why we probably left it for the end, is that you kind of don't want to do that. You don't want to be sued. You're really looking at being an active real estate investor. Your chances of being sued if you're going in different states is high. And people tend to think you have money when you're a real estate investor, but they don't see the costs that come with it. And why would you want to expose yourself to so much liability if something goes wrong? So really, Sole proprietorship is, or general partnership is us coming together saying, hey, let's get some real estate, let's own different homes. But the smartest way is to sanction off our assets and put them in LLCs to protect ourselves.
So sole proprietorships and even general partnerships, they offer no liability protection whatsoever. Is that correct?
Yep. So they could sue me and you, and I could have only have given you a little bit of money, and then we could have been 50-50 and I only contributed a little bit, but they can go after us, whoever has the most.
So why would people, knowing that, right? Knowing that the fact that it doesn't protect you against any litigations, any lawsuits, why would people actually choose to have a sole proprietorship or one of those companies to that matter?
Convenience. I mean, I guess mortgages, I think if you're on the deed as well, that you're liable, and you let your mortgage company know, I'm only doing this to asset protect myself. Sometimes people just don't know. They just, they just want to go out there. They want to buy a property. They just want to get into it. I want to be an investor, but they don't think of these things. And I think it is so simple to be it. Like literally tomorrow we can go out and say, hey, we want to own this and buy this and get it. If you have money saved to put a down payment and get it, or maybe even own it outright. You just have to think for a little bit extra cost that's 100% tax deductible. Why would you not protect yourself?
True. And one thing that I realized I forgot to mention earlier. So you can open a sole proprietorship with your own Social Security. Yes. So that's another thing that you should be more protective of. You do not just give your Social Security number out in the blue. And so for EINs, corporations, and companies to that matter, you actually need what it's called an EIN, which is, what does it stand for again?
An employee identification number. This
is how I look at it. Social Security for
your
company,
business,
right?
For your business. So the good thing about it is if you're going into these investments and stuff like that, and you get something called 1099s, like let's say even if you have your own business, you're not putting your name and Social Security number on private documents. You're putting your company's name and you're putting your company's social EIN number.
Right. And a side benefit out of that, of having an EIN number, is that you start building business credit. So you're keeping your personal credit under your Social Security, right? And then at the same time, you're building your own business credit, which is going to help you to expand faster because you build it, the debt doesn't go into your personal credit, you become a business on your own, and you keep the two of you separate, right? You want everything that's business related to go into your business, and you want personal to just stay within personal. So that's some food for thought for you to make an informed decision, right? You know which one is our favorite, but in the end, it all comes down to what works best for you, right? Don't say, well, I'm just going to do an LLC because Lucy and Jennifer, that's what they like to do. No, do what makes sense for you. We're expressing our opinion about what has worked best for the two of us, but always consult with an attorney, with a CPA, with an accountant, and make sure that whatever entity you choose to use to form your business entity for your real estate business or any other business endeavor that you're about to hop onto, that it makes financial sense and also legal sense for you and the state that you choose to do business at. And I think that's everything we have. Is there anything else you want to recap on or share with the audience today?
I highly agree with Lucy. This is our favorite. We're going on our School of Hard Knocks, our experience in the real estate industry, and we also live in a different state. So you should definitely not just think this is our favorite else because it's their favorite. It is the most newest and most flexible, but definitely speak to an attorney in your jurisdiction and a CPA in your jurisdiction to see what fits best for your tax needs. Because everyone has different tax needs.
And that's right. So we hope that you find today's episode really valuable and helpful. And again, if you know about someone who might need access to this type of information, feel free to share the love and send them a link to this video today. And as I mentioned in prior episodes, Jennifer's contact information is down in the description box below. So if you have any questions regarding to business entities, feel free to just shoot her an email and get in touch with her. She'll be more than happy to help you out. And that's it for today. Don't forget to hit the like button or subscribe. And without further ado, I'll see you guys next time. Take care. Bye-bye.